All right. All right. This should work now. Okay, so I'm just going to wait for a few people to come in. What's up, guys? I know it's been a little while, but we've been working on a couple of things. So starting this new element to the channel itself, we're going to break down pairs because in the first part of the channel, we're just talking about the mindset. Now we're going to start looking at how to really dive into understanding what the fuck is going on with these market makers, because their moves, all right, if you understand what they're doing, then you'll see them in plain sight, you know. But more importantly, what you've got to understand is, a lot of people will say it's all good talking about charts that have already happened, but if you can't see it in hindsight, you'll never see it in foresight. You're not training your mind to see things, and that's what I'm trying to get across to people. You have to look at past performance, because market makers, they repeat the same shit. Why? Because it's their business model. They can't fuck the market, right? Because if they take it upon themselves to do 500-600 pip moves, all right, there'll be no players around. No one would be involved in the market. So they have, elements to their trading, should I say, the IMF, right, regulates the market makers in the sense where they say, look, don't send price too far up or too far down, because you need to create a market. So, but look, I'm going to wait just for a few more people to come in, and we're going to get straight into this. We're going to be talking about cable, GBPUSD. I'm going to pull up a couple of pictures on before and after, and we're going to talk about how this move actually occurred. So I'm just going to wait for a few people, have a look at the chart, read what's in front of you, and just see if you can gauge as to where I'm going to go with this. So I'm going to wait just for a couple of more seconds. I'll give it one more minute and we'll see what's going on. But I hope everyone's been good, man. If you're new to this channel, just do the subscribe thing. It doesn't cost anything. Even if you want to like it, dislike it, it's a contribution. That's how I see it. But I hope a few of the people that do watch the channel, I hope everything's all good your end and you've had a great new year and Christmas, given the circumstances that we've got. Man, this COVID situation, it's wild, especially in the UK. Now that we've got another variant, it gets better. I mean, COVID is very fashionable in the sense where it likes to make a statement. We think we've sorted it out in one aspect, and then another variant comes up, so, but hey, this is the reality that we're in. Okay, right, I'm going to get straight into it because you guys can obviously watch this at another time as well. So let's take a sip of the coffee as we always do. All right, let's get to it. So the last two videos about breaking down the pairs, I was typing on the screen because it was pretty late, and I just wanted to type things down because some people might want the notes. And if you do want the notes from the last two, I'll get them sent over to you, no problem. Just give me a message and I'll get them all sent over to you. But what we were talking about is trying to understand, the cycles that happen in the market, right? Now, just before Christmas, I got back in touch with one of my, well, can I say good friends, friends of the family. The way life went, he went one way, I went the other. And we got back in touch with each other. And this guy's been trading for like 18, 19 years. He was asking me how trading's going. I was like, yeah, everything's all good. And I asked him how his was, and he was like, yeah, I've been doing this, X, Y, and Z. And he introduced me to this method. Now, this method it's all over the internet. It's out there. It is a course that is chargeable, but because of how long ago this course came out, it's now gotten to the internet. It's free of charge. And when I say free of charge, it's just got into the wrong hands and it's just been put all over the internet. So I feel bad for the guy, but quite frankly, if anyone's going to help anyone to understand it, then they're doing a good thing. All right. So he was telling me about this method about how to beat the market makers. Now, considering that my methodology that I use with my trader at home, his method is about the market makers, but he talks more about the phenomenon of what market makers do at certain key points. So for example, as I've said in my last few posts, that market makers build their shorts at above key areas in anticipation to clear them and close them on the way down. And then likewise with longs, they build them below in order to smash price up through and get them closed at a higher point. But what my friend was telling me, Chris, his name is, he was introducing me to this method where it's really understanding what it is that the market makers do. And what's frightening, right, is how this guy's approach. Now, this guy was approached, has a friend, or should I say, his friend is a market maker who's retired. He told him how it works, and this guy created a course for it. All right, and it's out there. And it's by Steve Mowry. I can't even say his name. But my friend Chris, he gave me the system and he said, just have a look at it. Tell me what you think, because I've been using this and it's really good. Now, considering I've been working on a system that already utilizes the market makers method, this system has now completely added, should I say, a better edge for me. It's put a lot more things into clarity for me. So I used the whole Christmas period to understand the methodology alongside with what I already know. And marrying the two together is what we've got in front of us right now. All right, so it does look a little bit chaotic, right, with all the writing and all the lines, but I'll get into it so you can understand it in a short moment. So we pulled up GBPUSD. Now, based on this, is going to be like a summary of the system and how it works. Okay, so the market makers, they work on a weekly basis. All right, every single week, the market makers, they have targets. All right, they have price targets, and they have a whole week to achieve those points. All right, now weekly cycles, they happen between 2 and 5 days. All right, you can have a cycle that lasts 2 days, 3 days, 4 or 5. Right, it all depends on what the market maker is trying to do. So it's really down to understanding when those cycles occur. All right, now let's have a look at the charts. Let's get into it. So this is what we looked at before. All right, we started off here, level 1, level 2, and we got level 3 as this area here. Now if we pull up, I believe we were looking at, yeah, we'll look at this image here. Let's look at this image here. This is level 1, level 2. Now when I say level 1, level 2 and level 3 up here, these are what people call, what conventional wisdom says, right, is the impulses, the momentum. All right, well, it's far from the truth, guys. You know, the problem, and I'm going to be doing another video on this, all right, and it's going to be called "You're Fucked from the Start," right? Because everyone that comes into trading is coming on false pretenses. They've got the wrong information. All the information that you've got out there, all right, whether it's about support and resistance, trend lines, Fibonacci's, stochastics, and all of that shit, right? It's there for the market makers to take advantage of. All right, I'll give you a fine example. Fibonacci's, man, the 61.8 zone. I've mentioned this before. The reason why this gets so endorsed so much in trading is because the market makers know that hundreds and thousands and millions of traders out there use these Fibonacci retracement zones as profit points, you know, stop losses. You know, they put all their stops in certain key areas, and the market makers can just send price to those areas, absorb the liquidity for their orders, and then change the direction. You know, trend lines, they know that if, for example, here's an amazing one, right? And this is part of what I was told by this guy, Chris, in this system. Get any book that talks to you about trading, all right? And they'll always tell you about the number 3. They'll say 3 hits to the high, 3 hits to the low, 3 touches, you know, 3 pushes, 3 candlesticks. It's always 3 because everybody sees that 3 is the magic number. Now the market makers know that 3 is the magic number to the retail traders. All right. So let's look at this. You've got a push here to the high, pulls back, push again, comes back, pushes again, right? Now, any retail trader would see that, right? And if we were to ignore this aspect of the chart, all right, a trader would look at this area here and say, right, it's come back to the 50-day, it's pulled back. I'm going to try and get my money's worth. I'm going to add a few more positions because I feel like I've missed out on this big run up, okay? So they'll add positions here, it goes up. The trader thinks now that he's in the money and he's like, yeah, I got in good, I'm back in the trade, all right? Spikes up, the guy sees a little bit of profit, as you can see from the pin bar, and it pulls back again. Now, the trader's thinking, okay, it's already tried it. I'm going to hold this, all right? And if I can add more to my position, because look, it's in an uptrend, then happy days, all right? And then you see how price then tanks down and pulls right back up. Now, the trader, depending on his stop, all right, let's go to the actual chart itself and look at that move, all right? Let's look. You'll notice here from this candlestick here all the way down here is about 26 pips, all right? Now, the trader that went in here, for example, or entered here, all right, he would have put his stop quite tight maybe, or he would have entered here just for confirmation, or maybe up here at break of this as the confirmation for him. So he may have entered here, okay? So from that point down, we've got, got about 30 pips, okay? Now, 9 times out of 10, every book on trading will tell you to set a stop loss when you're trying to do a 2-to-1 on your money, 3-to-1, 4-to-1, whatever it is, okay? They'll say to set it between a 25 to 50 pip range, all right? Now, this is how the market makers work. They know that all these books contain this information, all right? They endorse it. They encourage brokers, when they talk about, market discussions or, market updates, they'll talk about these sort of things because they know traders, retail traders are sitting there watching it and absorbing it and taking it in as make-believe and then coming to the charts and saying, right, all right, this looks like it's going to go to the upside. Okay, I'm going to place my long and I'm going to put a 25, 30 pip stop. All right. Now this candle here, you notice it's spiked all the way down and it literally touched the end of the 50-day. Okay. Well, if we look at it logistically here, you got a 26 pip drop. So any of the guys that entered up here have had their positions taken out on the basis that they set their pips about 25 to 30 pip stop loss. All right. I mean, normal retail traders will probably have entered on the break here. So that's even more of a stop. I mean, look, that's 31. Okay. So what I'm trying to get at is the market maker knows that the traders are going to set their stops in between a 20 and 50 pip range. All right. I mean, there's very few traders that are going to put a like 60, 70 pip stop. That's just stupid. That's that's stupid. Anyone that does do that, then if you're a position trader, then it doesn't matter, or an investor, it doesn't matter. But when you're trading, you're not going to put a 76 pip stop, all right, to make yourself 20 pips. The risk reward is backwards, all right? But so you understand how price works when it comes to the market makers. When people see this sort of behavior here, they think it's rejection, all right? They think it's rejection and it gives them another confirmation to re-enter, because the guys that were long here and got stopped out at the touch of this candle here wanted to get back in by the time this candle closed, all right? Because it closed above the 50-day. They thought, I'm not missing out on this move, okay? So the market makers kept price in this region here, all right? This spike here, if you can see this candle, this candlestick here, right? The spike down to the low, but it stayed above the 50-day, was another inducing mechanism by the market makers to make traders believe that there's going to be support on this 50-day, all right? And the guys that got back in saw this big candle push to the upside. They got really excited. This candle here would be the climatic candle from the market makers. This is them preparing to shift the zone. But as you can see, what they did straight away, it pinged again to the upside, the whole number here, and then it just pulled back in an orderly fashion, retested to make the guys who may have entered here, okay, believe that it's going to actually make another attempt to the upside, right? They spiked it again, and then they pulled it back, and this big red candle here shifted the zone. All right. Now this big shift in zone, right? The market makers had absorbed all the liquidity in this region here. All right. You've got to remember, they started building shorts from here. This was where the peak formation is. Down here it says 2PFL. Okay, and that's the peak formation low. I'm going to be talking more about this. All right. This is where the market trend changed. Okay. And the reason why it holds as a peak formation is because after a session, it locked in. This is the Asian session, okay? And it locked in the peak formation by staying above it, okay? And then you've got the confluence of the 50-day moving average closing above the 200-day, and then you've got the 800 EMA right there, all right? Now, I took an image. This is the image that I took, and we anticipate that pound dollar was going to go lower. All right. I believe the actual picture that I've got, here you go. This is the actual image taken from last night at 10:45. I said that pound GBP, because in the last post, the video episode 2, I talked about dollar yen. No, yeah, it was dollar yen. Or was it? No, I think it was Kiwi actually. I think it was Kiwi. I said I was like literally, no, yeah, it was dollar yen. I was 4 pips out from it actually hitting the actual price point. And I didn't actually label the price area. It was a bit of a joke with the guys that were watching. And I was, 4 pips away. Now, I wasn't doing it to try and confirm that I can predict the future. No, I can't do that. It's dog shit. I looked at Kiwis before and after, and I was completely wrong with Kiwi. And that's what trading is. The market maker can change his intention at any point, but when he lays his hand down, he can't turn back. Because he needs to book a profit on the positions that he's built. All right. So this chart here is exactly the same chart that we've got in front of us. Okay. Now this chart on the right, okay, was this extension here. Okay, so just so you can see it clearly, if you pay attention, there's that green candle here, and there's that green candle there. Okay, so this is the Asian session, and we anticipated that the market makers would send price up, okay, and then it would come back down. All right. Now, I wasn't anticipating that the Asian session was going to send it up and then it was going to go back down. No chance. All right. At some point in the whole session, we would see lower side to GBPUSD. All right. Now, the reason why I made the assumption that that would happen was purely because of what was going on the chart here. Okay. And the build-up of it. Look at these big pushes, these green candlesticks. This was level 1 down here. You've got level 2. All right. Level 1 is an aggressive move out of the previous zone. Okay. It's an aggressive move because the market makers had absorbed the liquidity at the low of the peak formation and they wanted to move out. The reason being is because they need to book a profit. All right. Because they can't sit in the same area for too long. All right. They need to try and get as much liquidity as they can. And then they need to try and move price so that they've got all the liquidity trapped from all the traders who are using make-believe systems, following indicators and all the dog shit that is put out there, Now, look, guys, I am not saying that anything that you know right now, okay, about trading is wrong, but what you know is only going to allow you to win 50 to 60% of the time. If you're happy with that, great, all right? But what you really need to understand is you're applying a system no different to gambling. All right, you're applying a strategy no different to gambling. When they say you can't be always right, no, you can't always be right. You can never be 100% right, but you can be right 8 times. You can be right 9 times out of 10, And when you understand how the market makers behave, you're going to see that movement. You're going to see that behavior and you're going to know, this is what they're trying to do. When you start thinking How would a market maker want a retail trader to believe or see or make believe? Okay, that's where your edge comes in, you know, because all we're doing is we're just focusing on, break of the 50-day, or this box area has been it's been penetrated. If it hits it the third time, I'm going to go in, I'm going to go full house. I mean, look, if you see an area that gets hit 3 times, what do all these books tell you to do? If it hits it 3 times, you make your position, you enter. Well, when it does hit it the third time you've entered, it goes the opposite direction. It always happens. Look at the chart now. You've got first high, major high, second. And look at the manipulation below the 50-day and continued back up. Any retail trader will tell you that will support strength at the 50-day, right? So you're loading up, and then look, smack. The market makers came in and smacked price back down because they trapped all the liquidity here. All the retail traders that were on the belief that if you were to draw a fib zone, okay, you would have had the 23 area here, okay, and you would have had traders that would have put stops in that area. Let's fucking do it now. Look, let's see if it does it. Let's take the low from here, do a fib from there. Okay, maybe not so much 23. Okay, but you can see here that area, they know that traders are going to be seeing that area. Do you understand? They're going to be looking and saying, right, let's use this area as an area for stop loss. I mean, if they were up here and they set a 50 pip stop, then fucking hell, ask yourself why you may be losing so much money, because you've got such a high stop and there's room for it to hit, Right, let me just get this up here. Right, okay, cool. So let's talk about what actually happened. So going back to this chart here, right? By understanding what the market makers are doing, all right, you're going to be more confident in your trading and know that when you enter, you know for a fact it's not going to go anywhere else other than the direction that you've entered in. The system that I was introduced to, okay, talks about if you haven't made money off your trade within the first 2 hours of it being placed, scratch the trade, get out, all right? Because when you've entered correctly, the market makers will make their move. For example, look at this, false move up, stop hunt, attempts the high the last time, okay? So the market makers stepped in, sent price up to trap more retail traders on the belief that this V here was strength, okay? And the fact that it closed above the 50-day, all right, they got in, sent price up, and then they closed below. They allowed it to rest, and then before you know it, they entered here again. If you look closely here, you can see the pin bar. That again, and they're bastards. There is making more retail traders believe that there's still strength, okay? They made them believe, yeah, this is it. This now is going to make its way back up because it's a pin bar. It's a little, it's a hammer. It's going up. Okay. What you should notice is the wicks are all at the lows. The bigger wicks, they're all at the lows. They're working the stops. They're absorbing the liquidity. Okay. They're getting orders filled on the way up. Remember, market makers, they pump and then they dump. And then look at this next candle, slash, it drops. So they've just killed all the guys in this area, got all their liquidity. They probably trapped $500-600 million worth of contracts in this area here, and they shifted out. They needed to shift out just so they could book a profit. All right. So all the guys here are absolutely squashed. All their accounts probably hit margin and they're all fucked. Welcome to trading, guys. Now let's look at what pound GBPUSD did. So we've got here the Asian session. The second image, this one here, was the full Asian session plus the London. Okay, this would have been the Thursday, and we were waiting for the Friday to occur. Okay, so here we go. Friday. What have we got? So let's lower the chart here a second, just so you guys can see. Sorry about this fiddling about, guys, man, but it's all relative. Okay, then. So, what have we got here? Let's pay attention. So this chart is a 15-minute time frame, 9:30 Sydney, which if we look down, we have actually got, it was at 11:15 last night, GMT. All right. So let's come back out. So this is the Asian session, the green box. As it comes out the Asian session, we go into the London. All right. Then you've got the New York Open. GBPUSD ran to the high again. If you notice, it took out the previous area because there may have been guys that held this trade. All right, look. If we look here, we have got from, let's say, from the last initial high to the last initial low of the session, midpoint. Okay, so it's a 75, yeah, it's a 75 pip range, 80 pip range, yeah. Would certain traders hold that? Maybe, maybe not. Nah, it depends. Okay, so let's look over here. All right, in. So the Asian session comes across here, all right? New York sends price up. It hits the previous area again. So the market makers created the illusion again that there was support at the 200-day, right? Now here we've got retail traders textbook entry 101, all right? Look at this. Drops to the 200-day, finds support. Drops again, finds support. Tests a third time, okay? And every retail trader with a grain of rice for a brain who sees this in textbooks would have entered here. Why? Because that's what the market makers want you to do. All right? So you would have entered. Notice the green candles here. You have got aggressive move up, up, up. These are vector candles. Now, the signs to me here are that they're ready to go short. Vector, vector, okay? And then we had another vector candle in the New York session, which went all the way up, but came back down. That candle there was the signal for me that the market makers, at some point in the Friday session, they were going to move price, all right? Reason being is because they've effectively kept price in this area for so long. Right? Remember, the market makers can be as irrational as they want. Okay? Can you activate the subtitle feature? Yeah. I'll get that on. I'll get that activated for you, my friend, on when I get the video re-uploaded. Okay? Because right now I'm working off one screen. Right? Because I'm actually changing my setup up right now. So please forgive me if you can't understand what I'm saying. I'm so sorry, but I will get the activate the subtitle feature on there. I don't know why it doesn't do that. Okay, right. So yeah, back to what I was doing. Okay, so yeah, the market makers effectively kept everything in this range here. All right, because you've got to consider as well. Let's look back. Market makers went on a 251 pip move. They need to book some profit. They need to get their money back. Because remember, the market makers, all right, they do have unlimited money, but only to a certain extent till they have to see a profit from it. Because all they're doing here is they're giving it out here, giving it out, giving it out. They give the money here, 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 here. They're giving their liquidity to the retail traders who are of the belief that price is going up. And when I say liquidity, I mean that they give an order, they set an order up for the trader who wants to buy, all right? They're offering a short, all right? So they get their shorts filled at higher prices. 1, 2, 3. Look at them going all the way up here. Now the market makers realize that they've absorbed all this liquidity. Okay, this is all in 1 week. This was week beginning, right? Got your Monday, Tuesday, Wednesday. No, yeah, Monday, Tuesday, Wednesday, Thursday, Friday. Okay, started from the week. Now a week for me starts on a Tuesday. I never trade on a Monday, and I'll explain why. Okay, but they moved the zone up. They got their shorts. They've now manipulated the price in such a way, okay? They sent price down, retested, as I said to you earlier. Every retail trader would have taken this trade, okay? They would have packed up on long. They would have wanted price to break this area here, which would have confirmed and solidified their entry, and they would have stayed in the trade, okay? And they probably would have moved their stop to make sure they saw a profit, okay? But then there are some traders who may not have put a stop, and they would have probably left it down here, okay? Now, if you notice, they sent price upwards, okay? Move forwards. They sent price up, up, up. They retested the previous areas you can see up here, okay? And then the Asian session started. We're at the range weekly high, hit yesterday's high there, came back, touched the yesterday's high twice, okay? Hit it once, hit it twice, went for it a third time. Are you ready, guys? The number 3 again. The number 3 appears again. And why is it the number 3 appears with the notable volume candles? Why? It's because they know traders, okay, trade on the third push of anything and everything, all right? They know that traders are sitting there watching these previous highs right here, right here. They think, right, if it can touch this area here again for the third time, I'm getting in. And then market makers, they've trapped the liquidity, and then they pull back. Asian sessions are quite a, quiet session. It sets the initial range for the day. And then before you know it, smack, breaks the 50-day, pulls down, breaks the 200-day, goes down, breaks the 800, goes down. Now, we had our screen, the prophecy, for a better word. We said that GBPUSD would hit 135990 in the Friday session. 11:15, Thursday evening, we're waiting for that to happen. And before you know it, there's the 135990, completely annihilated it. Okay? Now, the purpose for me explaining this to you or showcasing this to you is not because, hey, yeah, I've managed to predict where GBPUSD went. No, it's got nothing to do with it. It doesn't determine accuracy at all. All right? What I'm trying to get you guys to understand is this, that this whole move, okay, the build-up of this whole move, okay, happened before this happened, of course, yeah? But it's understanding what was happening. Now, if you take indicators, right, and look at this chart again, right? If we take, for example, Fibonacci zones, or if you take, EMA crosses, third touches, whatever it is that they are teaching retail traders in today's, guru courses, whatever it is. Now, I don't care if anyone calls me out on this. I'm trying to give you information on how the market actually fucking works, all right? And why people still lose. The guys that are actually making the money, all right, they may know this, they may not, they may know it in a different format, or they genuinely stick to the conventional trading wisdom of, what retail traders do, Now, what I don't understand is there are guys out there that teach people how to trade. They offer courses all on the same shit that is readily available on the internet. They've just sold it in another way. This is what I don't understand, A good friend of mine, I had a conversation with him only a couple of nights ago, and he sees traders, today's day and age traders, as marketers. And yeah, he's fucking right. You know, traders are fantastic salesmen. You know, they give you the life. You know, I can make 50K in a week, in a day, in a trade. And there's you, right? Little Tom coming to the screen, sitting on your phone, on YouTube, in your £12 slippers, right? Looking at life thinking, I want to do that. Why can't I do that? And then you've got the guy on the other end of the stick saying, look, anyone can do it. What the fuck is that? What kind of shit is that? Like, and the worst part is, look, I'm not going to discredit the guys that do create courses, man. I'm not, because they've taken the time to get all the information that is readily available on the internet and present it in a nice way. You know, if I were to take a shit in a bowl and dress it up very nicely for you, you'd appreciate that. You know, you'd be like, hey, you know, Tino, thank you so much for doing that. You know, I like the cellophane around it. I like you got a bit of, you know, incense on there to take away the fact that you got a bowl of shit, you know? And this is the truth about human behavior. This is what people are like. And the industry of trading is no different, you know? Right in front of you guys is the market makers' playground, right? They're the bullies. Our job is to be friends with them, not go against them. You know, we need to know that when we see price rising, we need to be ready for price to change direction, not because we think it's in a bull run. I mean, look at the fact that it went up and then pulled back down to the 50-day. Anyone with a brain will tell you that if it comes back to test the 50-day or whatever moving average you say, okay, if it comes back to test it for the third time, make your entry. Well, let's look at this. Up 1, comes back towards it, 2, 3. What are you doing in that area, Mr. Retail Trader? You're buying because it's tested it 3 times. You need confirmation on top of confirmation. In Steve Nissen's book, Japanese Candlesticks, the first page of the start of the candlestick patterns, it says add caution to caution. Well, there you go. There's your third caution. So if you entered long on the basis of adding caution to caution, you would have pretty much been bummed out and you would have had your stops hit. Okay? Just look what pound GBP did here. Completely went down. This move was something that you could have seen, and you can see it happen over and over again. Now, for the guys with the trained eye, okay, you could say that there was a big M. You see it? You see the M? First leg, second leg. There's your other leg. There's your second leg, sorry. And then down. There's a massive M right there. Okay. Now, some traders, as a day trader, you ain't got time to be trading that. You know, that's the bigger picture of things. If you bring it down to the 1 hour, it's going to be a look untidy. Yeah. Sorry, hold on. If you look at the 1 hour, people would see that as a double top. You would have had to wait nearly 2 sessions for that. Now, personally speaking, me on this trade, I would have taken this trade here, because I would have taken the breakout from here, because in here there's a small M. Okay, so if you can see that, rise, pull back, rise, drop, retest, continuation. Okay, I would have taken this M. That would have banked me easy 50 pips. I would have traded it down to the 200-day. When I'm doing intraday trades, I'm always looking to either trade to the 50 or to the 200. I ain't about the hero moves, man. I don't care about these 350 pip moves. They don't interest me. Why? Because they put me on an emotional wreck setup. You know, I like to know, if I said to you, I can guarantee to you to get 50 pips, you'll be like, yeah, okay. And I say, but I can tell you how to make 250 pips, but there's a good chance that you probably go on an emotional roller coaster. You may or may not hit it. You'll be reluctant. You would be hesitant to even think about putting your money down. If I guarantee to you 50 pips, you're going to do it. You know? Right, so let's say here, to the 200. 60 pips. All right, let's be conservative. Like, you know, I'd say 50 pips. I would have been out of here. I wouldn't have had too much money on the table there. All right, I would have waited for the Asian session to complete. I would have seen as a quick trade as well. I would have looked down here, and here would have been a stop hunt low rise. That move right there would effectively tell me that the market makers are setting up to find the low of the day again. Okay, because they achieved it in the low Asian session. They would either test the Asian session low, okay, or form price in that region, all right, and lay out their true intention, which again, the Brinks trade here, they dropped price down, stop hunt low, and rise again, all right. Notice how they did it below the 200 day and they continue and came back up, all right. For me, that would have been a V pattern right there. And if you look as well, you've also got a nice W pattern, second leg. When I trade W's and M's, okay, I'm trading literally my entry is going to be probably at the, yeah, you can see the little pin bar there. Or probably on the open of this candle, green candle here, okay? And I'll probably put a stop just below about, you know, 10 pips below the, yeah. This was the previous, yesterday's low. So I'll probably set a stop at about 5-6 pips away below that. Okay, that's what I would have done. I would have gone and traded for the next zone, which was the high from the previous session, which is exactly 50-60 pips again. No, that's how we ride that. Just look at when you're looking at charts, guys. Okay, I've not given you. There's no indicators here. You know, there's no indicators, just a moving average, right? A fucking moving average, guys. I've got a few lines that tell you where numbers are, but I'm looking at the way the candles are preparing themselves, what the market makers are doing to the retail traders. Realistically, all we have from the market makers is the stop hunts, the accumulation periods, and the consolidation periods. You know, that's all we've got. The levels, we know that during a week, a market maker has anything between 2 to 5 days for a cycle. All right. I don't trade on a Monday. I used to try and trade on a Monday, but something subliminally wasn't allowing me to trade on a Monday because I kept losing money on a Monday. Right. What a shitty start to the week. And then when I came across this, I was speaking to my friend Chris, telling me about this guy's work. He says that you don't trade on a Monday because Monday is when the false move is set up. The false move occurs on a Monday, you know, and that's why I would always be losing money on it during the Mondays. Sorry, let me see who's just Stephanie Lewis. Do you trade fixed lot amount or calculated lot based on your start? Fixed lot amount, no. Look, in terms of lot sizes, when I'm reading what's happening in the market, I'm going to go in as much as I physically can. Okay, if I can drop 10, 15 lots, I will do it with the intent to try and get at least 25 to 30 pips from it. You know, I would drop my lot size if I did believe that price was going to go to a certain area, if I fancied trying to take the swing from it. But that would all depend on how I am doing in the week. You know, so at the start of the week, I'll be very, very, very conservative. You know, I'm a scalper by trade, right? My job is to get in and get out. All right, so I'm adding more artillery to my behavior on trading. I've said before, I never liked swing trading, but this is effectively day trading, because all you're doing is you're entering at certain points and getting out as soon as possible. A scalp can be for 1 second all the way to, you know, an hour, you know. And what I liked about the whole thing was the fact that, you know, if you haven't made a profit within 2 hours of entering your trade, that right there has resonated with me so much because I would hold some trades, right? Even though my stop hadn't been hit, I would hold the trade for absolutely ages. And when you think about it, if you've made an entry on the basis that price should be moving up higher, but it's not actually going anywhere, even after a 2 hour period, you're going to sit there scratching your head thinking, hold on, it's not moved. Why hasn't it moved? If the market was designed to move at this point, why hasn't it moved? I need to get out, because the fact that it's stalling is telling me that I'm wrong. Because you can imagine if you entered on the break of a certain level and it didn't go anywhere, you'd be thinking, hold on a sec, I'm doing something wrong here. You know, something's not right. For example, look at this. Let's say you've got this Asian range here. Okay, say you entered. Each candle here is 15 minutes, right? Say you entered on the break of this, right? Up it went. You want to go long, right? Now you've set your stop. Say you set your stop down here, right? You're waiting. 1 candle, 2, 3, 4. That's 1 hour. Yeah? 1, 2, 3, 4. That's 2 hours. If you were to hold this trade, you would be going up and you would be made to believe that it's going to continue up. Okay? And then look what happened. It goes down, it takes out your stop in such a nice, polite manner. These market makers, sometimes they're really kind to us, guys. They're really nice, you know? They do things ever so nicely just to break us in slowly. They're bastards, man. They know what we're doing. And they know that we don't know what they're doing. You know? And we're working. I'm trying to help you guys see this. You know? 2 hour rule, guys. It makes sense. Because you would have scratched out of this trade and you would have sat back and reevaluated. And you would have then said to yourself, okay, maybe I'm wrong on the long. Yeah, it's shown support of the 50-day. It's tried to go back up, spiked the high and pulled back. Hasn't gone past anywhere. That to me is a sell. I wouldn't trade the Asian session. Remember, the Asian session is the market makers area where they set the initial high and low for the day. All right? It's the manipulation zone, man. This is where I start my trading. I start my trading on the open here. This is from this gap here. This gap here up until the London Open, right, based on this beat the market maker method, okay, is the gap time, right? It's the time when once the Asian session is over, the Asian market makers call the guys in Frankfurt and London and say to them, hey, what's up, guys? How you doing? Okay, so we've been busy. We've managed to build 500 million of contracts that are long in this area here. We got $500 million worth of trapped longs in that area and $250 million worth of short contracts at the low in this area here. Do your math. So what happens is the guys in the UK, all right, get the commitment to try and open up the liquidity of the trapped $500 million up here. Okay, so the market makers in Asia set up that range. They grab up all the orders. All right, then they make a phone call to the market makers in the UK and tell them what's up there. Because the market makers in Asia know that the London session is going to help them book a profit. And the London session is going to book a profit off what they've done in the Asian session. Do you understand, guys, why opening or buying a book that says learn how to trade and they don't mention a single fucking thing about this sort of behavior, you're going to be sitting there scratching your head thinking, why the fuck am I still losing? You know, why is it when I make an entry, all right, my stop gets hit and it goes in the direction that I was right at in the first place? Oh, let me increase my stop. Well, that means you're exposing yourself to more loss. What if the next time round you increase your stop because of what you thought last time? And then that increase of stop bleeds your account. You know, this is what you've got to understand. This business is not designed for retail traders to make money. It's designed for us to put money in it. We are the liquidity. There's only 3 market makers in the world. One in Asia, London, New York, right? Now, when I say only 3, it's not individual guys, it's teams of guys. Guys and girls, they're all working together. This is their playground, guys. And we come along with our Fibonacci's and our support and resistance, fake support and resistance. I think it's fucking hilarious. I've been in the market, 10 years? Am I a genius? No. Have I got the best experience? I'd say, yeah, I have, because I've lost a ton of money. I've lost loads of money, man. I paid the fucking tuition, right? Paid the price. And the sad truth is, there are going to be guys, all right, that are going to come into this. There are going to be guys that are going to watch this video, right? They ain't going to take it seriously. They're the ones that have come from TikTok, all right? Deposited a few £100 and already plotting on which dealership they're going to get the Ferrari from. What the fuck is that? That is screaming. If I was a market maker and I knew what was going on TikTok, I'd be so happy. It's not like they haven't got enough money, but they know that new blood's coming in. So the process resets. New books are going to come out. More books are going to come out, repeating the same shit. How to draw a support and resistance line. Here, let me go to Baby Pips. Let me fucking pull up an article off Baby Pips, which is a free site. All right, let me put it all on Canva and make it look really cool. Make a Thinkific account, create this course, make a YouTube account, sell the fucking course, right? Get that money I make off the course, deposit into an MT4 account and make it look like I'm fucking stacked. And I'm a great trader. Get the fuck out of here, man. That shit makes me want to smoke my pipe. It's frustrating. It's very frustrating. I'm telling you the blunt truth of this industry, guys, okay? Right? Until you understand that it's not designed for you to make money. You'll make a little bit, but only until you understand what's going on behind price. I bang on about it all the time, okay? And the problem with clickbait as well, and the problem with so many other guys, is they talk about the same shit that I talk about, but there's no context to it. Some guys are genuine in their approach and they want to show people, but they too are not really looking into it as deeply as possible. Not even that. They probably don't know. They probably don't see or understand the logic behind what is actually going on in certain areas. See, a lot of guys will say pin bar, hammer, 3 crows, fucking bearing engulfing patterns, break the 50. Yeah, I'm using those terminologies, but I'm telling you what's going on behind the scenes of what's going on in that area. For example, when the 50-day is broken and it comes back, what is actually happening? What is it? Support? No, it's the market makers wanting to make the retail traders that got stopped out up here get back in again. Can you imagine if you had $100 million worth of traders setting positions in this area here, and they set their stops down here, and you close those stops, absorb the liquidity there? You know that if you print another candlestick above the 50-day, you're going to induce another $100 million worth of contracts there. It is printing fucking money. Do you understand that, guys? These guys are corrupt, but we need them to be corrupt, because if they're not, we ain't making a dime. We might as well just invest in fucking Tesla or Facebook and just leave it. Let's just all be Warren Buffets. You guys have come to trading because you want to change your life, or you genuinely want to know what's going on. Because if you don't have an obsession, you've got to be like so hooked on this to understand what's going on. You need to marry this shit. You need to keep looking. Now, if I didn't speak to my friend, okay, I would have still been doing the method that I've been using for the past 6 years, and I would have been happy with it. But now that he's incorporated this for me, I'm looking and I'm thinking, Jesus Christ, You know, you can actually see what they're doing. When the trained eye knows what to look for, okay, you can see what they're doing. Let's have a look, right? I mean, I'm not going to leave this too. Actually going to end this in a few moments here. Right, I'm going to tell you about what's going to come next in the next few videos. All right, but guys, I do hope, you know, what I'm telling you is, you know, is sinking in some way. You know, if it's helping you realize what's going on. You know, Stephanie, you asked a question: do you trade a fixed lot amount or a calculated lot based on your stop? Okay. Back to when I mean, I did answer the question. I kind of didn't. I don't spend time worrying about my exposure. That's really bad of me to say this. And the only reason why I don't spend too much time on it is because if I've entered at the right point, okay, I'm in the money. Okay, I'm in the money. My stop loss is there purely for convenience, because if I'm entering on the basis of what the market makers are doing, okay, and I'm reading price the way or reading their footprint, okay, I ain't going to be interested about the stop. It's there purely for a convenience aspect. It's there just in case someone shoots the president at the moment that I place my trade and the markets go crazy, right? I'm actually covering myself. So for me, if I want to trade 10 lots, I'm just going to put 10 lots and I'm not interested in my stop. It's going to be like 5-6 pips away, maybe 10 pips, 15, who knows? Depends on what the actual trade is that I'm looking at doing. All right. So I hope that answers that question for you. So moving on, guys, what I'm going to be doing from now, every single day, I'm going to be doing this breaking down the pairs. All right. So it's interactive sessions where I pull up a chart, I do the before and I do the after, and I explain to you what goes on. This is the best way that you guys are going to absorb this, because the more that you keep reading and watching what I'm talking through to you guys, I know this chart looks really fucking messy, okay? Please forgive me. It's the first one of the series, so I'm just playing around with stuff, okay? But what's going to happen is these charts are going to look much more tidier, okay, as I compile up the trades, and we're going to talk more about these behaviors that the market makers set up, all right, because it's understanding the psychology of what the market makers are trying to make retail traders believe, all right. Yeah, we've got the trading psychology where it's, you know, cut your losses, make sure that you don't expose yourself, you know, think in probabilities. Well, the only reason why we do have these psychological issues when it comes to trading is because we are being fooled and being set up to feel that way via the market makers. For example, let's go back here, right? In this area here again, talking about the 100 million. If $100 million of contracts is opened in this area here, anticipating for it to go up higher, okay, the market makers, the retail traders open up here, they set their stops down here. Market makers can see this, so they smack price down. Now the guys that lost out and had their stops here, they want to get back in again. So there you feel fearful. You're thinking, look, I've missed out on this whole fucking run up. That's not fair. So there you go. They've got you again. You know, I want a piece of the action. You know, it's tested it once, it's tested it twice. Third time, it's now ready to run up. Look, we're at highs for the day. Come on, you know? And then they smack it up again. They confirm the retail trader that, yes, you were right. It was good of you to get back in. And then they just trailed it back down. And look how they do it slowly. That slowness there. And then look at the pins to the high and back, pins to the high and back, pins to the high and back, pins to the low and back. That is sending retail traders fucking nuts. Could you imagine entering? You're entering here, you get stopped out here. You enter on the way up of this candle, You see this big move up, you think you're in the money, and then it comes back down. It goes back up again, and then it goes down, goes back up again. You're just thinking to yourself, fuck, what am I going to do? I can't stand it. Look, we are long. GBPUSD is going to go back up. I'm going to hold this position. Whilst you're having that discussion with yourself, price is slowly trickling down and eating away at your account. Okay? And then the euphoric state comes in and you think, right, it's going to hold. There's a pin bar here. I'm so happy. And it comes back up, works the highs. Look, there's no pins at the lows. That's the market makers making sure that the retail traders longs are getting in, right? No pin, no pin, very little pin, no pin, no pin, little pin, little pin. Okay? Remember, we're at previous day's high. That blue line there is the previous day's high. Okay? So you can imagine that all the retail traders are thinking there's going to be a break to the upside. You know, there has to be a break to the upside. Look, we've even got a whole number, the 1.37. Retail traders are thinking, yeah, man, price is going to go up there. It has to go. You know, they're trapping these guys, man. Look, and they trap them all in a 40 pip range. That's a small range, guys. That's a fucking small range for a pair that has an average ADR of 124, and it does a 372 pip range, average daily range in a week. You know, trapping up the traders here, and then bang, they shift the zone. These are the trading psychology things that we all hear about, even the shit that I talk about. You know, what I've just explained to you guys is the meta game. That's the meta game of trading. It's understanding what's going on behind price. It's understanding what the market maker wants the retail trader to do. There's not one fucking book that talks about that. And I ain't going to be the guy to write about it either. No. The reason being is because it has to be spoken. It has to be seen. It's all good writing about it, you know, but you can't, you have to want to be in the meta game. You have to want to accept and know more about it for you to understand it, you know? Because if you just take this literally, right, and just follow a basic system, yeah, even then you could make money. But if you're going to be a surgeon, are you only going to study certain aspects of what it's like to be a surgeon? You're going to be pretty fucking useless, you know? You're going to be the surgeon that they say, look, the guy's just ripped his toe, can you put it back for him? You are a surgeon. You're a pretty shitty surgeon. You want to be the neurosurgeon, the guy that fucking puts out the cortex of the brain back correctly, you know? That's the surgeon you want to be. You want to be the surgeon in the markets. You want to treat yourself as the top surgeon, the guy that understands and knows and how to deliver. He knows what's going on. You don't want to be the guy that's wishy-washy. Don't be the jack of all trades, master of none. You know? I learned a thing or two about. So, moving on, guys. You're going to be seeing these breaking down the pairs. Please put down in the comments if there is any particular pairs that you want me to talk about. All right? I've had a bit of a transitionary period in my trading life, man. This Christmas time and this lockdown has really put me into perspective. I've been stuck with euro and with dollar yen for the past 5 years. I ain't moved away from her, man. I've been loyal to her, right? But I need to move on. I need to see what these other players are doing, you know? So if you guys have got any pairs that you want me to compile up for the week, for next week, which is what we're going to be doing, all right? I'm just picking out majors, you know, and looking at certain crosses. Put in the comments. Let me know what you think you guys would like to see, all right? Because I need your guys' feedback, because I ain't going to know what more I can talk about. I ain't going to know if that's a good idea to talk about that, because there might not be guys interested in that, you know? So if there is anything that you guys want to hear, get at me, man. Put the comments in. I always reply to every single comment that comes, you know? So if you have liked this, guys, just let me know what your thoughts are on it. And I do hope that the continuous videos that are going to be put up on YouTube, the more I do this, the better it is that you guys are going to be absorbing it. All right. Remember, hindsight is great. Foresight is better. But if you can't see it in hindsight, you ain't going to see it in foresight. All right. So, guys, much love to you all. I hope I brought some value to you guys Friday night. All right. Going to have another video going up tomorrow night as well. It's going to be talking about traders' logic. Okay. It's having the logic of trading, of thinking in a certain way, thinking about what's going on in this sort of area here. All right. And I'm just going to be talking over a few slides, and I hope that brings some value to you guys as well. All right. So guys, peace out. Much love to you all, and we'll catch up soon.